Okay, Dan Fitzpatrick here, stockmarketmentor.com. And today was kind of an interesting day because of some of the earnings that we got yesterday. We got Apple and Sandisk and Western Digital. And so I want to go through just Sandisk. I don't think I have time to go through all of them, but Sandisk is the most important one. So I want to share my screen here. Okay, so this is how the stock looked yesterday at the close. Note that it had closed right around 540, give or take a little bit. And so this box here is what the implied move was. And the implied move, you get that from the options market, and you look at the front month, like the near-term options, the ones that are going to expire the quickest. It used to be it's like the third Friday of every month. Now it's every week. Most options, most chains on most stocks have weekly options. So here I was looking at the Friday options that were going to expire to get a sense of how far the stock was going to go one way or the other. And so it actually measures out to about one standard deviation, what the options market prices it at. So it's about a two-thirds chance of being right. There's like a two-thirds chance of the stock being in this box. Okay, I'll get more to that in just a second, but being in the box, how, when, what? Like, what does that mean? Okay, being in the box at expiration, at the expiration of the contract, which is I'm doing this at 12:49 or 3:49 Eastern. So this stock has like a 2 in 3 chance of going out today, somewhere in this box by the close today. Uh, Spoiler alert, it is. So that's the way this is calculated yesterday, like this is where the stock is going to trade somewhere in that box. And so it's fine to say, oh, it's one standard deviation. All right, well, how the heck do I find that, man? I'm not a statistician. So you look at the options chain and say, okay, $540 is the price that it's at. So that's at the money options. So you would look at the 540 call and the 540 put. Those are the two options that are at the money. And then you say, okay, well, if I want to buy a straddle, meaning I want to buy the 540 call and the 540 put, how much am I going to have to spend for that? And whatever that total is, that's what the implied move is. And so if, for example, these aren't the numbers, but if, for example, the call costs $10 and the put costs $10, add them together, that's $20. So the implied move isn't $10 in this direction and $10 in that direction. No, the implied move then is $20 here and $20 there. That's what the implied move is. And so we add those together, add the call, add the put together, and you get a certain number. Okay, so that number I got yesterday. And what was it? About 50, I think it was 50, 52, 57 was what it was. So you go 57 up, 57 down. Here's my box. And so then what happens to the stinking stock? All right. Stock gaps way up high, way outside of this box. But if you look at it during the day, like it just traded, I don't know why I got to get rid of TC 2000, man. It's like buggy whips. Anyway, so the stock gapped up and then right away it just started trading down. But gradually over time, by the noon hour, it was indeed into this box and then it kept going. And now it's rebounding a little bit and probably close a bit higher, but it will definitely stay inside this box. So the reason that I'm mentioning this is when you see this when you draw this box yourself, but when you see a stock go way outside the box, either one way or the other, you have to assume that that's a stretched rubber band and it's going to snap back the other way. So we saw that even with Sandisk. Now, the stock, it still closed 5% above the prior close. So that's pretty cool. But at one point this morning, it was up 27%. And so from this, I could go here, whatever. It was up 23%. So for this to be up 23% at one point and wind up only 5%, that's kind of a bad trade if you're still hanging on to it. And it's also a real bearish sign. So the point that I want to make is these boxes mean things and they do drag prices in. They definitely drag prices in. But if you see this type of thing, you got to get out. I did the similar thing with WDC. We'll get rid of that. That was for something else. WDC, the stock stayed around in the box for a lot of the morning and then gradually sold off. Well, guess what? Here it is, 247.21. The projected move was 248. Who knows? Yep. We could be getting a run right back up into that box. And so I think I did this for Apple as well. Yep. This was the box for Apple. It's behaving like a good little boy right in the middle. So anyway, I hope hope this little lesson on implied moves works for you. You can absolutely use it to your advantage when you are trading because it's about as close as you can get to a prediction that tends to be pretty accurate. I can't predict squat, but if I look at what the implied moves are, at least I have a range that I can make decisions in. So, okay, listen, 59-minute trader. That's a course that I've taught several times, and it's effectively a day trading course, but it's more just about understanding the opening rotation. And I was in there this morning with about 50 people, and we were actually looking at Sandisk. We were looking at that. Here's a daily 5-minute, 15-minute, 30-minute. So we'd had positions in this since way down, like this was a monster trade. And so we're looking at this going, all right, great earnings. Is this a time to be maybe buy more because the stock is kind of sticking around there, at least for 5 minutes. Maybe it's time to buy more. Maybe we're going to sell. I don't know. Let's wait and see. And then the stock starts drifting down below this orange line here. That's the volume weighted average price. Time to sell the stock. So if you're just going by the VWAP, which was what we are, you got out of this really pretty dead balls close to the very top. So the reason that I'm mentioning that to you is the stuff that I teach works. It works really, really well. And if you're not using it, you definitely should. I'm just telling you, you definitely should. I got just a lot of feedback from people just today on this session that I taught, and I'm going to be doing that every once in a while for 59, I call them 59 minuteers for people that have taken the 59-minute trader course. So if you haven't done that, check it out. You'll find it on the website. So check that out. You're going to make money, and part of making money is knowing when to sell. You don't have to be day trading, but you do have to understand how trades work. You got to understand that, okay? So that's all I got for you today. Hope you all have an awesome weekend, and I'll see you Monday.